Hi everyone, Nick Shaheen here for Benzinga, MarketFi.com. I have created income with option spreads. Recapping week ending 5/2 and looking into next week. Today was flattish, but was definitely far from being boring. We had the jobs report before the open, and it definitely created some huge movements. Most notably was the spike, the crash in the TLT, and then a spike, and conversely a spike in the 10-year, and then crash, which made the end results of the day a little misleading. Meaning that yes, we were about flat in the market as in general. The SPX lost about 0.13%, which is not much, 2.5 points. But the the swing came from a much higher high, and here's what I mean. This is today's movement on the SPX, or the cash, I should say. So you can see the spike at the announcement of the jobs report, which, by the way, came in better than expected in the high twos, 280 something. And then immediately in the pre-market we sold off, but then when we opened, we fulfilled the prediction from the pre-market, and then we proceeded to just grind down all day. So what happened? Here's the TLT. Okay, if we look at the TLT, which is basically what's killing stocks these days, here's what happened. The announcement happened right here. You can see the candle, big candle, and the giant whoosh down, and the TLT went down to 110, 85, 80 something. But then as soon as we opened, half hour into the open, or an hour into the open, an hour and a half, straight up. And as we went straight up right here, you can see exactly coincides with the straight down as far as the SPX is concerned, the markets in general. And then all day we grinded higher. And so that's what I mean by, even though it was flat, it was actually, you can consider it a pretty down day because we started out with such enthusiasm. So the most of the negative effect that the TLT being spiking, and the yen spiking, and the 10-year crashing, was offset by the efforts went into squashing the pop that we had in the pre-open. I hope this makes sense. In other words, it should have been much better, but those bonds are killing the party. And today, all their efforts went towards squashing the pop. So all the pops are relief pops, therefore shortable. Yet the doom still lingers. I'm not a subscriber of doom. Too many people expect it, and I think we will get blindsided by it when nobody expects it, or very few. So this was the day, today's recap. The On the positive note, the small caps ended green, not by much, 0.25%, but green nonetheless. And it's 2,000 stocks, so they speak. I listen to them when they speak. So in other words, this week was a pretty decent week. If you look at the SPX, let's go to SPX. This is the TLT, which I'll come to. Okay, since I'm here, the TLT is inversely trading with the market these days. So a while back, this is a weekly 1 year. So we could argue, one could argue that we had some sort of a cup and handle here, or rounding bottom, cup and handle-ish, that would put us up here exactly as a target. Now let's hope that this is where it's going to stop and turn around and say, okay, I fulfilled my target and I'm going to go down. It is higher lows knocking on the top from which it broke out. Usually higher lows. I mean, it's an uptrend. It's pretty strong, and the sellers will eventually get tired of selling it, and God knows where it's going to end up. But we should react worse than we are reacting. Combine it with the fact that Ukraine situation is getting worse. I'm a little worried that we're a little complacent up here. Let's hope somebody knows something I don't. So, that's a side note. I wanted to show you the SPX for the week. Wasn't too bad. If one was knocking at these levels, I mean, we're knocking from again higher lows, so we're threatening to break out. But given everything that's going against us, are we going to break out? And if we do, how far deep above 1900 are we going to go? I was brave enough to short it this week. I noted to all the members that 1900 is definitely shortable. As a matter of fact, a lot of them shorted even lower than that. This morning I missed out on a trade that didn't execute. I was shorting at 1895 for 75 cents and it didn't execute. I was asking 75, it was at 70, and I should have just changed it. Anyway, they're shortable. Also, Apple was shortable today, this week at 600. Again, the members benefit from that. All week long, the two best, no surprises for me, were the ranges of the SPX and the range in Apple. They were both shortable via credit call spreads, and the members benefit from that. I sent them out daily updates, and if you're interested in those updates, let me know. You can reach me through MarketFi, messaging board, create income with option spreads. You can find Nicholas Shaheen there, or you can send me an email directly at sellspreads@gmail.com. sellspreads@gmail.com. I'll get back to you as soon as I can. And no email gets unanswered. Everything gets replied to. So this was the SPX. So not a bad week, but big but is that all the warning signs are getting bigger. What do I mean? The TLT is getting worse. The situation in TLT is getting worse. So I'm a little worried. I am a little worried. Not worried because doom is impending and we have to sell off. I'm worried that the warning signs are getting bigger, and maybe somebody knows something I don't. On the flip side, if everybody is looking out for an accident in the car, so everybody's on alert, everybody on the road is looking for a disaster, people tend to drive safer, people tend to take precautions, buy puts, all of that. So if the doom happens, or when the doom happens, maybe the rush for the exit will not be as a madhouse as it would be if nobody was expecting it, because a lot of the traders are claiming that they've sold everything. And I lightened up over the weekend. What do I mean? I didn't sell stuff I didn't have to sell. Any profit I had from this week, I booked it. I had a couple of long positions in Google. I booked those for a small profit, but a profit nonetheless. I can reinitiate the position next week with no problems. I had 2 credit put spreads in Google, and I closed both of them. So there are things you can do along the way. Don't be one-sided in your trades, I guess what I'm trying to say. So no surprises in SPX and Apple. I'm going to look to reinitiate those trades all week long next week. So again, if you're interested in those levels, send me an email, sellspreads@gmail.com. The surprise this week was LinkedIn. Oh boy, LinkedIn. They announced, and the market said, ugh. At first they said, no, not so much. They announced right here. They sold it down. They ran it up. And anyway, today we opened with some hope and then just straight down. It got killed. I mean, 8% down. That's just a surprise. I had a lotto ticket. I had a debit call spread for next week. Obviously, that was worth almost nothing, but no sense of selling it now. It's worth nothing. So my lotto ticket's still in my drawer. Should we have a pleasant surprise next week, some sort of a miracle, then I'll sign the back of it. What wasn't a surprise this week, which I played nicely, was Yelp. Also reported, but a day before. So 2 days ago, I saw something in the options market that told me that they were going to try to run it up to 70, to the $70 level. And so I bought call spreads, and sure enough, they announced, they sold it, they bought it, and then they ran it back up pretty close to 70. And as soon as that happened, I said, you know what, now the situation has resolved itself. All this is based on open interest. I said, I'm going to turn around and take the flip side of it, because the run-up was just for market makers to make money and not based on fundamentals. So I turned around and flipped it, and sure enough, look at it today. Today it was down 6%. So up 10% yesterday, down 6% today. So made money on both ends. That was not a surprise. This one of those one-offs that you're happy. I didn't make a ton of money, but I made some money. But the fact that I actually saw it coming, it's very rewarding. So that's one of the stories this week. Next week, what am I going to do? Okay, so I look at my portfolio. If I'm too long in my portfolio, I'm going to look to short some things. What do I short? I short things that are going to move faster than the market. Maybe I can short IBM. Why do I want to short IBM? Because here's IBM. Wow. Because yesterday, strong market day, it was down $3. Today, down another $2. More concerning is that it seems like it's reaching that blue level that I drew up here and failing every time in spirit. But also the most concerning part is that not only that traders were selling the stock, obviously the markets were selling it, but they were also buying puts on top. The puts put to call ratio was 2 puts to 1 call, actually more than that. But so they're not only participating in straight out selling the stock, they also want to participate in the option market by actually betting against it there too. So I'm going to join the herd. I don't know who knows what. I'm jumping on board. If I'm too long, I'm going to buy some put spreads in IBM for next week and see what happens. I may actually make them for May to give myself a little time to recapture some premium if I change my mind. So you can do it either far out of the money, so much lower than now, and take too many contracts, or I like to play it closer to the money. This way I can change my mind. Yes, I pay more for it. The reward probably will shrink a little bit. It's a bigger loss if I'm wrong, but I have time to change my mind about it without it going to zero immediately on the smallest spikes. So that's one thing I can do. I can also short the SPX, short Apple, credit call spread in both. But you have to do it at levels to where you have strong conviction as to why it shouldn't go there. And if it does, you should have plan B ready. So get to know your levels and do some credit call spreads if you want to hedge a long portfolio. Everything I do is money I can afford to lose. I never bet on anything that I can't afford. If I wake up and worst case scenario has happened, if I imagine the worst case scenario and I get nauseous, I want to throw up, maybe it's too much. Maybe I should dial it back. So I never take more chance that I can afford to lose. Another thing I'm going to do next week on my to-do list is to do some iron condors and the small caps. I feel like I've gotten the beat on some good levels, and I'm going to target those levels. I'm going to make it a May position, and I already shared it with the members, so they can probably follow along if they want to. But the point is there, I think that after hearing Obama today and Merkel today about the Ukraine situation, it sounds like they're kicking the can until the elections happen. Because nothing official, nobody's in official power in Ukraine until that happens. Because if you remember, there was a coup in the Ukraine, whether they call it a coup or not in the media, it doesn't matter. That's what happened. People uprooted the government and tossed out the president. I said, get out. So now there's an interim president and an interim government, which is not elected. So they're basically unofficial. So until that happens, nobody can do anything. So I think they're kicking the can until then. So I may be able to work with some premium. So I'm going to sell some tighter than I like iron condors, and I'm going to make it heavier on the call side. In other words, I'm more scared of a sell-off than a pop, because every pop is just a relief pop and it's being sold. So I'm not as concerned on the upside risk, I'm more concerned on the downside risk. So I'm going to, if I do 10 contracts on the credit put spread part of the iron condor, I'm going to do 15 on the upper side or so. That's just an example. Plus, I may also hedge even more on the downside by buying some cheaper, shorter term, maybe next week put spread, just to give me a little time to react in case of a whoosh down. The premiums are a little higher than I expect usually, because I usually like to go further away from the money and take less premium. But in this case, I think the risk reward warrants the risk, warrants the chance I'm going to take on this. So I'm going to do that next week. I may also do it in actually one thing I did this week also is shorted the NASDAQ comfortably via a longer dated credit call spread that is $25 wide. So if you've got the margin, it seems like an easy trade. I gave myself about 7% move up from here. I think I'm pretty safe, especially that Apple had already reported and it's like 13% of the index itself, and Google has reported. So where the pops are going to come from, it's going to take a miracle to say, okay. And even then, I'm long enough. I mean, it was a hedge on some longs I had. So you have to consider the overall portfolio. Short some things that are going to move fast on the way down in case you have a long portfolio. So the idea is don't go all in with everything. Okay, you gotta say what if this and what if that. This way you can, if you're hedged, if something moves against you, then something else is moving with you, then you can close both for an even trade. So that's next week. Reevaluate your portfolio. This recap, I'm going to make it shorter than usual. I usually go about half an hour. We're inching up on 15 minutes, but I do want to leave it on a good note. In fact, that this week everybody expected the worst, and we had the chance of having disasters with Ukraine. I mean, who'd have thought that after hearing, I mean, today I'm reading 39 dead in Ukraine. That's massive. I mean, that's big. I thought we would be like selling the market like crazy. The TLT 113. I thought this would sell it off like crazy, but yet we're still hanging around. I don't know if it is justified exuberance or justified bullishness, or is it complacency. I think time will help us answer that. Next week should be a light news week, so if we don't get any headlines into Monday, we have the chance at a flattish open on Monday, and then there's no jobs, no major, oh my God, this is the biggest news forever. So we have a chance to trade maybe on some fundamentals. Maybe we'll revisit some. One thing I'm not going to revisit is I'm not going to commit to any momentum stocks. The only ones I would commit to are ones that actually have earnings, like maybe Priceline. Speaking of earnings, it's going to report earnings. I'm going to go long into it. And I'm going to give myself to be right, time to be right, maybe even through some leaps calls, because it's been beaten down so much. And it's a good company. It's got real money, and it's global, and it's based heavily in Europe as well. So it's got everything going for it. Yet they treat it like it just came up with an idea, and it's a .com that sells on eyeballs. Not so. So there are some good things. There are some warning signs. Look at the big picture. Zoom out. And if you need to reach me anywhere, sellspreads@gmail.com, or the MarketFi messaging board is excellent. So hit me through there. Once again, Nick Shaheen. It's the recap of 5-2 looking into next week. Thank you for your time.